Open your cerebral cortex and shift your lobes into upper beta phase, because you are going to have Bitcoin knowledge transmitted directly into your vestibulocochlear. Your host of Bitcoin Knowledge is Trace Mayer, an early Bitcoin advocate since it cost $0.25, but this is not intended to be investment advice. A doctor of jurisprudence, but this is definitely not legal advice. And an investor in core cryptocurrency infrastructure, including Armory, BitPay, Kraken, and Mitagio, but this is not a recommendation of those services. Here, you get fed via direct mind download with pure and free Bitcoin knowledge.
Welcome back to the Bitcoin Knowledge Podcast. We have an excellent guest today, Jeffrey Tucker from Libertyme. Welcome to the podcast.
Thanks so much for having me. It's fun to see you again, Trace.
Yeah, good to see you. So what brought you into Bitcoin, into the Austrian School of Economics, just this fascination that you have?
Well, I like to think that we're living through still in the era of incredulity concerning Bitcoin. People, average people just still don't believe that it's possible, that it really exists, or that it has a value based on its utility. You know, this is still a common belief. And I used to hold that belief back in 2010 and 2011. I had read a number of articles about it, but I had been convinced previously that it was not possible to generate money through computer code, you know, and certainly not a money that emerged purely from a market in an era in which, you know, we have well-established monies, national currencies, and I didn't think that it could really work, you know. And so I felt like I was very much of a student of Satoshi well, I guess it was the early part of 2013. I wanted to believe it, you know, but I still didn't. So I had to do a lot of study. I had to throw myself into cryptography and peer-to-peer networks and distributed systems and open source software, all these different features, and integrate that as my previous understanding of monetary theory. And I went through something like 2 months of intellectual upheaval just to come to terms with the fact that it existed.
Yeah, I mean, when we look at the sheer size and scope and genius of Satoshi, I mean, he's touching on so many different aspects of human knowledge here. We've got mathematics and cryptography. We've got computer science, distributed systems, which is even a much more complicated niche part of computer science, monetary theory, monetary history, monetary economics.
I'm interested in is how it fits in with monetary theory and monetary history. Economists have yet to come to terms with what's happened. You know, it's very interesting. You're starting to see now the academic literature deal a little bit more with cryptocurrency, but still the mainstream journals haven't really run articles on it yet. You only see them posted as working papers and that sort of thing.
Well, I think one of the parts of this is, one, if you want to know the truth about money, you have to learn it on your own. It's simply not taught in university anywhere. Even the most basic fundamental facts of monetary history are not taught anywhere. For example, I was talking with Steve Waterhouse. He's Chief Technology Officer at Pantera, you know, major fund investing in Bitcoin. He's a PhD from Oxford. And I asked him, well, you know, who invented the gold standard? He was like, oh, I don't know. I was like, no, come on, like, give me a serious answer. He's like, it was some British dude. And I was like, oh, some British dude. I was like, who? And he's like, look, I don't know. And I was like, you had this scholarship of Isaac Newton when you were going to Oxford, and you didn't know that Isaac Newton invented the gold standard. Like, right. Really?
Yeah.
Really? You didn't know that one of our preeminent scientists who changed our entire view and concept of the universe developed the foundational monetary infrastructure that has lasted even until today, because we still have central banks holding physical gold in the vaults as a relic of Bretton Woods, as a relic of these other gold exchange standards, which ultimately go back to Isaac Newton as master of the mint when he developed the gold standard. And so, I mean, is there anything you kind of want to talk about in this area of monetary economics and monetary history? And like, what do people just not know? And they don't know they don't know it.
Right. Well, and I think the point you're making is very interesting. the financial systems and monetary systems become so enormously complicated now. It's not possible for anyone to fully understand them, really. And so people get very confused about what money is and what it's supposed to be and what banking is and how it's supposed to function. One of the beauties of cryptocurrency is that it's providing a kind of a nice template for understanding. We're beginning to understand the fundamentals of what money is and what it does and what banking is and what it does. And it's changing our sense of things. I mean, I don't think there's any doubt that if the dollar were reintroduced today, as a new currency, it probably would not be accepted by anybody because it doesn't have the features that you want from money. For one thing, scarcity. Right? I mean, paper currency just doesn't have that scarcity. It would not be trusted. One of the reasons cryptocurrency is trusted is that you can follow precisely its creation rate. You know where they all are.
It's mathematically provable.
Yeah, and it's built into the protocol. So everything's completely open source. You can know everything. It's a lot more open source, for example, than the Federal Reserve.
Well, Federal Reserve, I mean, what's happening there? We got pre-mined scam. We don't know the distribution rate. The decisions are being made behind closed doors, not necessarily subject to public perception even.
Right.
And then, out of nowhere, these central banks will completely reverse their policies like the Swiss National Bank did.
Right.
And just throw massive turmoil into the market, bankrupting businesses, bankrupting currency trading businesses, in addition to the manufacturers that are domestic. I mean, it's crazy.
Like the central bankers, you never know what policies are going to adopt. And you never really know if the policies they adopt are going to actually be realized in the real world. Like one of the things that central banks can't control is the velocity of money, which has plummeted since 2008, making it essentially impossible for the central banks to create as much money as they've attempted to. So they can fill the coffers of the banks up with as many newly created notes as they want, but getting them out on the street is a different problem entirely.
One of the self-regulating mechanisms in Bitcoin, because we have the 10-minute block reward, and as the velocity increases, it decreases the actual demand for the Bitcoins. And so it has a self-regulating effect on the price. And we have so many of these self-correcting, self-regulating aspects in Bitcoin that harness the natural laws of economics, just like the original gold standard did that Isaac Newton had introduced. It's natural Newtonian type balancing.
Yeah, and I think that Satoshi must have studied the operation of the gold standard when he put together the protocol. I mean, even the mining, which is a metaphor, really, in the end.
Well, we can see that Satoshi, he obviously studied tons of this and had particular beliefs on it. For example, his Ning profile, he chose a particular birthday, and it was, I think, like April something in 1975. And it happened to be that the date in April was when Franklin Roosevelt issued Executive Order 6102.
Funny.
And 1975 was when Nixon got rid of the illegality of Americans holding gold. So, Satoshi left these little Easter eggs all over the place. I'm sure that there's an Easter egg there about Isaac Newton just waiting to be found.
He was so much more advanced even than I thought. I thought I knew everything there was to know about money and monetary policy. I've been studying it since I was, I wrote my undergraduate thesis on the topic. It was a huge paper on the gold standard. I thought there was nothing else for me to learn. But cryptocurrency really challenged me fundamentally to rethink what I thought I knew already. And it took me really upwards of a year to fully integrate the existence of cryptocurrency with my existing theoretical apparatus. It took a long time to kind of think it through, which is a process that this generation is going to have to go through. But in the future, people will not be worrying about the things that we worry about.
It would probably be taught in the beginning curriculum.
Yeah. And also people will just be using it. It's just like electricity now. If we want the lights to go on, we press a button, we flip a switch and it causes the lights to go on. Nobody questions how this happens. But in the early age of Bitcoin, we're still very early in the process, people do have a desire to understand it and to think it through. Because really, there's still a lot of people that don't believe. Did you notice that recently, we've gone through a big price correction in 2014 and in early 2015. And once again, people are saying, well,
Bitcoin is dead.
Bitcoin is dead, and it gets so boring because, once you've lived through those cycles.
When I lived through all of them.
Yeah, you've been through all of them. So there was never a moment when you just fundamentally panicked. Because my first one, I actually was terrified when it went from, I think it was up to about 260 and then it fell back to 80. I sweated it out that day,
Yeah, I mean, there were times, when there's like $300 of volume in the whole day on the chart, and maybe it was all my volume, right?
Yeah.
But I don't talk about how many Bitcoins I may or may not have.
But it's still a relatively thin market today.
Yeah, it is relatively thin, but I think we've largely passed the point of no return. There was a time, when I thought Bitcoin may or may not survive. There were a lot more weak points all across the system, but the community is so large now. The code is so distributed. So many developers are working on projects and working on code. There aren't really single points that can be taken out anymore, whether it's big mining nodes or companies. Mt. Gox failed. It didn't take Bitcoin down. And so all of that, I think, like the network effects of Bitcoin have just taken such deep hold, and it's been growing so fast that I think it's largely past the point of no return. I think it will be the protocol that is developed for and adopted for transferring value over the internet. Now, how it'll mutate before it fully realizes that, a lot of speculation, but I don't see any other protocol anywhere close on the horizon that will be able to supplant it.
Yeah, and eventually, over the long term, Bitcoin may not survive. It could be something else. I think what matters here is the technology. It's the knowledge, as you say. Now that we have that knowledge and we know how to transfer value peer-to-peer, to commodify information and make that valuable and transfer it, on a geographically non-contiguous basis anywhere in the world in a way that's non-forgeable.
Solar system or universe, for that matter.
Yeah. Non-forgeable, non-reproducible. That's amazing. And I have to say that that's what convinced me when I first began to look at this. Is February 2013. There wasn't nearly as much information out there about Bitcoin as there is now. You have a lot of very good introductory articles and people explaining it in plain English and everything. But in February 2013, it was actually hard to find out things. And I had to dig very deeply. And I finally found out this point about the non-reproducibility of the individual unit, the monetary unit of Bitcoin. I found it out from a wicked article in Wired magazine where they were, again, announcing Bitcoin's death. And it was, paragraph 18 or something like that, where it just mentioned in passing that Bitcoin had solved the double spending problem.
And because you had this background in a lot of areas of knowledge, you were actually able to understand, holy cow, this is a big deal.
Yeah, that one paragraph just blew my mind. They call it the double spending problem. That's a funny word for it, really. But what it really means is the reproducibility problem. The digital realm is famous for its reproducibility. That's why it's so valuable. Once something's on the internet, you can create trillions of copies of it, and that's beautiful.
Well, I mean, yeah, the Byzantine generals problem, the solution that proof of work has introduced, the whole concept of distributed consensus, that's a major, major breakthrough. It's plagued computer scientists for decades now.
Yeah, and to write that kind of scarcity into the code and put it up on the blockchain so that it's carefully monitored. I remember I had become convinced, something like March, 2013. I was all in. And so I began to write articles about it, like somebody who just discovered it for the first time, And then I remember I was sitting there one night in April when a new block was introduced without the sufficient number of confirmations, and the community started going nuts. And I was watching this.
The inadvertent hard fork.
Yeah. You remember this?
Oh, yeah. It was like 2 o'clock in the morning, and like everybody who's somebody, their phone just starts lighting up.
I know,
with these
it was
text
crazy.
messages.
And I was
really
going nuts.
nuts.
I was watching this happen, and the thing forked. And and the price dipped, right? But it only lasted about 20 minutes, I think.
Well, that's because everybody's on the IRC channel. All the emergency first responders, like, we show up, bam, and SEPA actually figures out, he diagnoses the problem, and then everybody kind of discusses, and we have a potential solution all within like 5 minutes, right? Because when you can bring this amount of intellectual brain power to bear on a problem, and within 23 minutes, I think, the solution had been implemented. The people who needed to be contacted had been. And it took about another 6 hours for the chain to get overtaken and then the history to all merge back together. But at the end of the day, like, the end consumer was not affected in any way.
No.
Some miners were slightly affected, but we actually raised some money and compensated them for what they would have lost. And there's an analogy of these different operating systems and version control systems. And one of them is Git Airlines that they talk about. And with Git Airlines, referring to GitHub and this open source version control system, the people build the airplane and they take off in it, and they actually take apart parts of the airplane and rebuild it while they're in the middle of flight. And sometimes the whole plane just like starts spiraling down to the ground and looks like it's going to crash. And then the programmers, they actually just like build a time machine and go back in time and like fix the problem, right? People don't understand just how extensible Bitcoin is, in the sense of how resilient we can be in fixing problems that do come along.
And the network is watched so closely and so carefully.
Oh, yeah.
And even the slightest problem, I mean, everybody is seriously incentivized to discover anything. I learned a lot from being there at that moment of that, what'd you call it, the hard fork.
It was an inadvertent hard fork, because we do hard fork the network occasionally. We try not to, the developers. But this time, because there had been a change in the database use, and like, it had created an inadvertent hard fork. Bitcoin would have continued on, but it could have been very disruptive to overall consensus within the community.
But it's beautiful to watch that taking place, because you realize just how carefully watched this thing is. And it's hard to explain to people. I mean, you compare that with like modern monetary policy.
Oh yeah, let's go in and say, hey, you got to give us $700 billion or the world ends.
Well, I think how much new money has been created over the last 5 years?
Oh my goodness,
it's like $3 trillion or something like that.
Maybe it's more. Are we talking just at the Fed, or are we talking with the ECB and in Japan? And I mean, and then what about all the additional leverage and things like that? I mean,
and nobody really knows where it goes or what's going on. I mean, you find out about it months later.
Well, even scarier, we don't know who owns what. I mean, when we look at chains of title on houses or cars or airplanes or stocks or bonds or like other financial assets out there, we don't know who owns what. We don't know what has been pledged against what. I mean, we don't know how encumbered things are.
No, they can't even count up the money stock anymore.
Yeah.
In fact, people don't even have a viable, agreed-upon definition of what money is.
Well, Dr. Vieira's book, Pieces of Eight, and then where he wrote the article, What is a Dollar? And basically under federal law, it's unintelligible. There's no definition of the dollar.
No, and the Fed has no clue. I mean, you can pick your measurement. It's all. You can look at it at St. Louis Fed, but it all depends on how you want to measure it. And you never know if it's going up or going down, or, it depends on what you call the dollar, really. But in the Bitcoin world, everything's so extremely precise. And the slightest error, the slightest misstep in the blockchain, and everybody's all over it. To be the guy who finds the flaw is to be immediately famous and wonderful in the Bitcoin community. That's amazing. That's the right kind of policy, if you want to call it a policy. I think what we've learned from Satoshi and from our experience with cryptocurrency is that really this kind of centralized management strategies are not workable as compared to this decentralized protocol-based monetary policy, if you want to call it that. I really think that in an alternative universe, which I hope we get to someday, you could have all the world's currencies based on a sort of crypto model.
On blockchain technology.
Yeah, I think so. I think it could happen. And it may eventually happen. It's so much superior to very old-fashioned, trust-based, nationalized currencies. These things are really old-fashioned.
Well, they're just obsolete.
They really are in a digital age. And we have to break the network effect of it. But I believe that Bitcoin and other cryptocurrencies can actually break the network effect, mainly because the cost of transactions are so much less. And it's so verifiable, and it's so inclusive, too, which is the other amazing thing.
Well, and even better, who owns what. What's in what address. In our current system, we don't know who has what.
People have no clue what they actually are entitled to. We have this deposit insurance, which insures your deposits up to a certain amount, but you don't.
Then the Cromnibus bill, like now, the depositors have been superseded by particular bondholders.
Yeah.
and bail-ins and then, I mean, even worse, if you got another layer of abstraction with someone else between you and your assets with something like an IRA or 401k. I mean, we just don't know who owns what.
No, and the FDIC, if it had to pay out everybody at the same time, would of course be immediately
I think it's got $38 billion. And it's insuring $13 trillion or something.
Right.
I mean, right. And the Fed's balance sheet itself is down to like a 1.26 assets to debt ratio. So I mean, like the Fed's never been more over leveraged than it currently is. And then we got customer segregated accounts that are supposed to be sacrosanct that you can just hypothecate and rehypothecate like MF Global and John Corzine. And we just don't know who owns what or how it's been pledged or like who's got claim on it.
No, when you start to look at the details of modern money and finance, it's scary. Actually, you just wonder, what's going to be the event that causes, the run?
Well, I mean, panic. Well, we all know the first rule of panic. You do it first.
Yeah, that's right.
I mean, like Kyle Bass was talking about it. He's one of the fiduciaries for a big pension fund in Texas. And he had been touring the COMEX and looking at where the gold is vaulted. And he's like, it's actually kind of weird. It's not like it's in cages and marked off. It's like, here's a bar over here and a bar over there and like no rhyme or reason to it. And then he was talking with the manager about there's $80 billion in the futures markets, but only like $2 to $3 billion in the deliverables. And he's like, well, what if like more than kind of the average decides to take possession of the physical? And he's like, oh, well, it'll just be a function of price. And Kyle Bass is like, oh, that's nice. Give me my $1 billion of gold. Because I mean, 9/10 of the law is possession, right? So like if 4 or 5 or 10 or 100 people all have ownership or the asset is encumbered to someone, and everybody's got rights to it. Well, at the end of the day, if you got rights just as good as everybody else's, but you've actually got possession of the asset, then you're in a lot better position.
Right. Have you thought about this, Chase? The last big financial crisis we faced was 2008. That was when things got really messy and very scary. I wonder what would have happened had Bitcoin been around already in existence and already valued as it is today in the fall of 2008. What would have happened to the price?
Yeah, I mean, I had actually just finished my book, The Great Credit Contraction. I published it March of 2009, so 2 months after Bitcoin came out. And I said the Great Credit Contraction had begun. And in the Great Credit Contraction, we're seeking safety and liquidity. That's one of the reasons velocity is so low, is because capital is just parked in treasuries because those are considered extremely safe. But we don't know how much the 2-year particularly has been hypothecated and rehypothecated. So we don't know the quality collateral in the system. Last time it was money moving out of the money market funds and those breaking the buck that kind of seized the system up. But this time around, I think it's a run on the good collateral. And I think the New York Fed particularly is very worried about this. And when it comes to the custodians, whether it's the State Streets or, long-term capital management or Bank of New York Mellon, I think there's increasingly being a run on the good collateral. And so if individuals can remove the risk between them and their assets, if they can just get rid of any hypothecation or rehypothecation that's happened with their assets, then they know what they own and they know it's not encumbered. And with Bitcoin, this is particularly easy to do because unlike gold, you want to take possession of the gold like the Chinese are doing. You have to melt it down and reassay it and figure out that you actually got the gold. You can check the blockchain and instantly verify the quantity and the quality of the Bitcoins.
That's right.
And there is nothing like a good bank run to focus the mind.
That's so true, isn't it?
We've seen it with Mt. Gox and Bitstamp and IndyMac and Lehman Brothers and Bear Stearns and Fannie Mae, Freddie Mac, AIG. That's why AIG wasn't allowed to fail, is because they were the collateral backstop. And so I think what's happening is the good collateral is increasingly getting taken out of the system. And that could very well precipitate our next major crisis, which Bitcoin is there. It's like, well, just put my address on the blockchain. I mean, if I own it and you've got it and I can take possession of it, yeah, stick it over there right now. I'll take possession of it. And if Bitstamp or Mt. Gox or whoever owes 4 or 5 people the same Bitcoins or 100 people the same Bitcoins, yeah, somebody's left holding the bag. So, of course, if you're going to panic, do it first. So I think we're going to see an increasing return to this safety and liquidity. And Bitcoin, every day it's around, every day it proves that it's worthy of the safety. And the more the network effects take place, Microsoft accepting Bitcoin with BitPay, all of these merchants, like those are all network effects. That's a liquidity. And so Bitcoin could be very much the primary solution in terms of safety and liquidity that's needed as a solution in this great credit contraction.
I've noticed over the last 5 years, really over the last 2 years, there's increased interest in Bitcoin as a safe haven relative to gold.
Better than Hibernias in Ukraine, better than Venezuelan bolivars, Argentine pesos. Yeah. And we don't know what the institutions are going to do. I mean, obviously, if they've got the private keys on your 2-year treasuries or on your bank accounts, and if the government says, hey, you got to use the private keys to give us that 2-year treasury, the banks are going to do it because they hold the private keys. Bitcoin is much, much, much more difficult for the government to misappropriate or redirect because they don't control the private keys to it.
Right. Now, earlier you said something about Bitstamp and a few other exchanges. Were you implying that they hold fractional reserves?
Well, Bitstamp lost $5 million worth of customer funds recently.
That was a couple of weeks ago,
And whether they have fractional reserves or not, we don't know because unfortunately, and I talked about this extensively at the Coin Summit panel I was on, we need new standards in terms of information security standards, crypto standards to build out this whole concept of crypto auditing. So we're going to be needing to merge different disciplines.
Isn't there a consensus within the Bitcoin community that full reserves equal good business?
Oh, yeah. Having 100% reserves. Like we did Kraken, who I'm invested in, we actually produced the first audit for our crypto reserves. And we did like a Merkle tree, and you could figure out like whether your Bitcoins were included in our total balance without us also disclosing the total balance, because that could be a security risk. Jesse Powell and I talked about it in, I think, episode 124. But I don't necessarily think the problem is with the fractional reserving. I think the problem is we need explicit informed consent by individuals to be engaged in the fractional reserving. And we don't have that in the current system.
I see. Well, there's a wonderful website I enjoy looking through called Bad Bitcoin. I think it's .com or maybe it's .org. I don't know if you've looked at it, but it's
I haven't even heard of it.
It's fun, but it's a complete list of Bitcoin scams, right? And there are really thousands of them.
All over the place.
What's funny is that they all kind of have some or another version of the same thing. What they want is for you to give up your Bitcoin in exchange for which they're going to give you a high rate of return. Maybe it's from mining, maybe it's from investing,
lending them on margin or whatever.
Or maybe playing futures or whatever the claim is. They're going to give you a higher rate of return than you would otherwise get just by holding them. And that's what they want. They want your Bitcoin. And maybe you give it to them one time. They promise you access to them. At some way.
Of course they do.
and maybe they'll if you test the system once or twice, they will give you that access. But at some point, they start delaying the payment, or something goes wrong, and these are scams. But what's interesting to me, though, if you look through them, and I enjoyed this the other day, just looking through. Really, I think there may be 1,000 or something listed there. But the funny thing about it is that most of the Bitcoin, what they call scams, have a lot in common with actually conventional commercial banking.
Oh, yeah. Well, I mean...
So in the Bitcoin world, what's considered criminal is considered completely conventional in the mainstream world,
And we used to have a distinguishment between payment banks and depository banks. And this actually gets to one of the core reasons that I funded Armory. There wasn't necessarily a business model when I funded it, but I wanted the software created that was free for individuals to use, where they could safely and securely store the private keys to their own Bitcoins. Mm-hmm. Because what that would do is it would place out there in the market a silent sentinel that could always demand possession of the Bitcoins if the individuals wanted to.
Right.
Like a silent sentinel. And then, if someone's running their fractional reserve system or their Ponzi scheme or like whatever it is, get a grip on your Bitcoins. Just demand delivery, and you can immediately figure out whether they're solvent or not.
That's right.
And if they don't give you your Bitcoins, we got a problem.
Yeah. Bank runs in the Bitcoin world they're not really banks, right?
Yeah, but any run on collateral or run on assets or any of this, so now when people are keeping money in their 401ks or their IRAs, or they're keeping money in their bank or in their securities account or in whatever it is, they've now decided to knowingly or unknowingly, they're taking on additional risk for additional profit, when instead they could reduce everything to Bitcoin and take possession of the physical keys themselves in their Armory wallet and do it for free. You know, that's one of the reasons I wanted to place a silent sentinel out there where the individual could literally take the private keys to the wealth and put them into the cold storage. You know, you could be killed and your gold taken, and the person who killed you like actually gets the purchasing power from the gold. But if you've got the Bitcoins in your Armory wallet, like they can't just kill you. I mean, they got to get your cooperation to get those Bitcoins out in order for them to actually realize the purchasing power of those Bitcoins. So it acts very much like a silent sentinel out there to just stand watch and provide people an opportunity or an alternative to keeping their capital in some other asset.
But for the most part, the mainstream exchanges have been very reputable. Ever since the failure of Mt. Gox, there's been a great deal of risk aversion, I would say. In the and it's good. It's a good thing. You know, for 2 years before the failure of Mt. Gox, people were hoping that it was going to die. You know, they were convinced that it was something.
And the pricing mechanism kind of pointed to it. It's
that was interesting in the final days, right? At some point, Mt. Gox's exchange rates completely diverged from the world community consensus.
So, I mean, I think it's very much, you know, if you want to crawl out of your cold storage and go take on additional risk, you know, hopefully you're going to be properly compensated for that.
That's right.
And
But as you say, the key is understanding the difference between ownership and transferring that ownership in exchange for which you get supposedly a promise of higher return, but also higher risk. This is what's lost in modern monetary systems, the distinction between risk and property, really, between ownership and speculation.
Right. And the other big problem is we've never had the ability to, as individuals, to control the private keys ourselves. You know, because with our bank account, we have beneficial ownership, but we don't hold the private keys.
No.
We still got to go ask for permission and fill out a big form to wire the money around.
That's right. And pay fees and whatever.
Pay fees or whatever. But with Bitcoin, you literally hold the private keys to the wealth yourself. And I think that's part of the big, big deal on why it can be so much safer. Because like with gold, you still got to entrust somebody to store the gold. You know, unless you're going to go bury it in your own yard.
The more I think about it, the more I realize that, you know, there are many features that money has traditionally had, you know, fungibility and scarcity, durability, and so on. But the thing that Bitcoin has added as a feature of money that didn't previously exist is that Bitcoin is weightless.
Transportable.
And of course, infinitely portable. And it takes up no space whatsoever, except for just pure memory space. That's very important because you eliminate, actually, the warehousing
and those are additional risks, which decrease the safety of assets that do require that. You know, whether it's art or diamonds or gold.
What is the origin of banking? I mean, you have to go back to the Middle Ages.
Yeah, custodianship.
It all began in a kind of a warehousing feature, and then the speculative element of lending got mixed in with the warehousing function, and you know, there's a lot of court precedent there, and judges had to decide: do you own, you know, what you warehoused or not? And for the most part, they said you don't.
Well, and we split it up between beneficial ownership and legal ownership. But with Bitcoin, bam, you take possession of the private keys. Like you don't got to trust even the warehouse operator.
It restores the idea of money as property. That's the theme of my talk I'm going to give today here at this conference. Is about money as real private property, and which we've lost. We've lost that sense. We tend to think of it as a government-created social good to which we have access, you know, depending on the policies of, you know, Federal Reserve or the Treasury or whatever.
Well, and it returns the right to money or the right to currency to the people, which currently it vests with the government. And it's so disruptive because we're defining property rights with software code, not with legal code.
Oh, I know.
And
right?
and that is just so disruptive.
It's mind-blowing.
It's
really hard to wrap your brain around it, really. I mean, even now, we're 20 years, I would say, into the digital age. People are still very confused about what is the value of code, you know, what is the value of information, There's still a great deal of incredulity out there about the fact that Facebook makes money or that Amazon actually functions.
As if making money is a bad thing.
Right. So people are still not quite believers. I mean, the average person on the street is not a believer. They think that you have to be, growing corn or, laying concrete or putting up bricks or whatever to be creating value. Bitcoin has really challenged us in sort of fundamental ways to come to terms with the digital age, to come to terms with the new form of value in the world, which is really all about information. It's always been about information, but the digital age has sort of made that more real to us. And
real is going to change. People got to just readapt.
Yeah.
Well, it's part of our ability to abstract, which makes us different from animals. Our ability to abstract and kind of see things in different layers or in more complexity.
And the other thing that's amazing to me about this whole crypto revolution is that it's an inclusive kind of enterprise. Up to now, we've kind of just recognized or just sort of come to terms with the fact that there's excluded and there's included. And in this sort of heavily cartelized system, that maybe there are 2 billion people in the world that have access to banks and credit cards and that sort of thing. And we just, have blown off the other 5 billion. Crypto actually holds out the prospect of including them in the global division of labor, which is an extraordinary thing.
Yes, it's so exciting. We've kind of gone over our time, but what are you most optimistic about in this space, just in general?
Well, I'm most optimistic, particularly about this inclusion point. I think that once cellular technology sort of spreads all over the world, which it is, everybody's going to have access to this new system of money and banking to include all kinds of new people and talents and skills into global prosperity. And that's going to be amazing. I think we're going to see it. We're going to look back at 10 years from now and say, oh my God, this is amazing. This is a brand new world. So that's what I'm most looking forward to. It's not so much the Bitcoin adoption in the developed world, but I would say in the underdeveloped or developing world that excites me the most.
Well, wonderful. We've had Jeffrey Tucker, founder and CEO of Libertyme. Thanks for being on the podcast.
It's a pleasure to be here. Thank you so much, Trace.
Be sure to get a copy of the free Bitcoin Guide at freebitcoinguide.com. Got a question or suggestion? Record your voice at bitcoin.kn. Don't be shy. To help the show, share bitcoin.kn with friends, post about it on Reddit, and otherwise spam the interwebs. Your iTunes comments and 5-star reviews are very important to us. Please continue tuning in to the Bitcoin Knowledge Podcast, where we release interviews with the top people in the Bitcoin world. Now take some choline and let that Bitcoin knowledge consolidate.